Hello everyone. If required, please pause and have a look. This is the last night S&P 500 price movement. The cursor is the point where Fed chairman started his press conference. As usual, during that time, market was very much volatile, and also after the press conference, the negativity continued. So before going to our regular stuff, let's do the deep dive. What did he say and why market took those as very much negative? First of all, the headline US interest rate, as expected, they kept it unchanged, same 5.5%. Then during the press conference at the Fed chairman's introduction speech, he mentioned that he was happy in the last 6 months core PC inflation was continuously dropping, which he welcomes, and that gives the Fed chairman and FOMC members good confidence that they will achieve their 2% target. But in order to start the rate cut, they need a more greater confidence, which they expect to get it by the incoming of more macro data. Repeating his statement in simple terms, he was happy that core PC inflation dropping, and he got confidence that they will bring back the inflation under control but required further more evidence. All those, it was just regular. Then after that, various analysts asked various really interesting questions. Broadly, I will categorize all of them into 4. Is he confident that US economy achieved a soft landing? When he will or what will make him consider for the rate cut? Can we expect March month interest rate cut? Finally, what about quantitative tightening? First one, does he have confidence of achieving soft landing? For this, very much unusual for the present situation, he answered bluntly no. Meaning, he thinks still there is a possibility of mild recession or slowing economy, which is the answer no one expected. And another journalist twisted the same thing. Are we confident that we avoided hard landing like severe recession? At least for that he answered yes, he thinks we avoided hard landing. Then comes the second question, when he will or what will make him consider for the rate cut? In his statement, he did said he got good confidence. Then how much more data he needed for making the interest rate cut decision? This is really important one. This is where market started to turn negative. He said at present the unemployment rate is 3.7% and for the past 2 years it was below 4%, which has never happened in the last 50 years in the US history. Then US economy is growing stronger around 3 to 4% a year. And more importantly, the number of available job openings in US before 2020 was maximum in the range of 7 million, but now it's still around 9 million openings. So in simple sentence, the US economy is stronger, so he want to take advantage of it and intend to keep the interest rate higher for the longer period. Thus, they can bring the inflation down to below 2% target. In simple terms, he said for him to reduce the rate cut, either inflation has to drop around to 2% or the economy has to slow down. If neither of the scenario is happening means he is not in a hurry to perform the rate cut. Then the third one, in March month, can we expect interest rate cut? One journalist did ask this very important question more straightforward. For this, Fed chairman also answered straightforward that he don't see the interest rate cut happening in March month. This one answer spoiled all the March month interest rate cut optimism. Then the fourth question, more of the positive one, but on the press conference they asked this after the March month interest rate question, so the answer for this question gone unnoticed. Anyway, coming to the question, what is the status of quantitative tightening? At present, Fed is trying to control the inflation by 2 means. One, keeping the interest rate at higher level. Then second, by quantitative tightening like offloading the securities holding. Both are independent to each other. So in this meeting, they accepted that FOMC members did talked about possibility of increasing the quantitative tightening and reducing the interest rate hike. Hence, the general public will get benefited. But to take stronger decisions around that area, they decided to explore more in the March month meeting, and Fed chairman still thinks in this year as a median, he expect to reduce 3 rate cut but not expecting to start in March. So that's it. That's the overall summary of the press conference. So hereafter, market will cheer up only if it get bad economy data. To some extent, market is doing it already. Hence, all 3 US major index closed significantly negative. In the end, Dow Jones decreased 0.82%, S&P 500 down by 1.61%, and Nasdaq crashed 2.23%. In case of VIX, it increased near 8% and moved near 14.5 from below 13.5. Then coming about oil, last night for the week ended Jan 29, US EIA Energy Information Administration said that US oil companies' crude oil stockpiles unexpectedly increased 1.23 million barrels, whereas market expected the oil companies to withdraw 2 lakhs barrels rather than adding to it. Here, increasing the stockpile means decreasing in the demand, which in turn made the oil price to decrease near 2%. At the time of this video, Brent crude closed at around $80.5 per barrel and WTI crude trading just below $76 per barrel. Then regarding gold, earlier yesterday, it did increase around 1%, but after the Fed chairman's press conference, it also erased the gain. Thus, gold closed at $2,058 per ounce. Coming to Indian ADR, all 4 stocks was trading significantly positive in line with the Indian market, but after the press conference, ICICI Bank and Wipro reduced their positive gain, whereas both HDFC Bank and Infosys turned into negative. So the takeaway is Indian ADR did turn negative. About GIFT Nifty, it's kind of not sure state. I mean, when yesterday Indian market was trading, there were a lot of uncertainties like Fed chairman press conference, and today it's budget day. So though Indian market was trading significantly positive, GIFT Nifty's premium dropped to just 60 points. Since now we got 22 more sessions for expiry, the positive momentum view required more than 100 points premium. But due to uncertainties, the drop in yesterday's premium is understandable. So today, if the premium increased back to above 100 points, then we can consider market is positive. But if it stays around 60 points premium means, then the future market investors are not confident about upward momentum. So now today early morning 3 a.m. it closed at 21,789. If we consider 60 points premium, then it's the indication of flat to positive opening. If we consider 100 points premium, then it's the indication of 30 to 50 points gap down opening. As a summary, US Fed chairman press conference didn't go as per what market wanted, so global momentum dented severely. At the same time, today Indian government's budget day and also it's on the expiry day. So if there is anything too positive for market means like capital gain tax simplification or fiscal deficit reduced target or increase in personal tax slab, etc., then despite this US market negativity, there is a chance that might influence the Indian market on the positive side. At the same time, if there is too much on the budget that intends for the upcoming election means, then that will make market much more negativity. Conversely, there is a significant chance that market won't react to either this bad US market and also not to Indian budget. Rather, it might wait and will react tomorrow. Just for info, last year on budget day, Nifty closed more of a flat, but in 2022 and 2021, it did increase significantly. And in 2019 election year, it dropped 1%. Anyway, moving on, yesterday as per stock open address, L&T, Titan, BEL, Bosch, PVR Inox and IOC got an increase in open interest along with a negative close indicates the short buildup. On the other hand, Dr. Reddy's, HDFC AMC, Torrent Pharma, Cummins India and Sun Pharma got an increase in open interest with a positive price close indicating the long buildup. About the things to look out, Titan, Adani Enterprise, Adani Port, Bata India, City Union Bank, Deepak Fertilizers and India Cements are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, obviously it's budget day, so we need to keep tab throughout the day. It starts at 10 a.m. today. In addition, Chinese PMI, India PMI and Germany's PMI, US PMI data and Europe's inflation data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened lower, but after initial volatility, it gained strength and maintained an upward momentum. Thus, finally it closed 204 points positive. Hence, on the daily chart with healthy volumes, it formed a long green candlestick pattern. However, both daily and hourly momentum indicators having a negative crossover, so it's providing the divergent signal. Technically, in most cases, under such a situation, it generally leads to a range-bound move. Hence, the short-term trend for the market is waiting for the trigger. Maybe that might come from today's budget session. If there is decisive upside breakout above 21,800 means the market will move towards 22,000 mark. In case of Bank Nifty, it also had a strong day as it decisively surpassed the hurdle of 45,500. Thus, on the daily chart, similar to Nifty, Bank Nifty has also formed a long green candlestick pattern with strong volumes. So now it faces the next resistance at 46,500 and a decisive break above this level could potentially reverse the entire trend. On the downside, the immediate lower end support is positioned at 45,700 and breaching this level may signal a recovery of bearish control in the market. Regarding options open interest, the maximum call option open interest was at 22,500 strike followed by 22,000 and 21,900 with new call option writing at 22,500 strike and then 21,900. Thus, the weekly options data indicated that 21,900 to 22,000 levels are expected to be the resistance. Whereas on the put front, the maximum open interest was at 21,500 strike followed by 21,000 and 21,400 strike with new put option writing at 21,500 strike then 21,000. Hence, the immediate key support at 21,500 mark. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.